Hey everyone, thank you so much for joining the Behind Company Lines podcast. Today we have Ashley Aydin, principal of VamosVentures, a Los Angeles-based venture capital fund investing in diverse teams in the earliest stages across health and wellness, commerce, FinTech, future of work, and sustainability. Ashley, I'm so excited to have you on the show. As we were chatting before the show, it's not our typical guest type, but we've had individuals like yourself in here to really just kind of uncover some of the current landscape of investing, kind of how companies are evaluating venture companies are evaluating startups and kind of that whole experience. And also I'm excited because as a Latino myself, I'm really invested in helping kind of, and really, I guess, give more access to opportunity to a lot of individuals who come from a similar background and are looking to either start a company or look for resources or help. And so I'm really excited to chat with you. But before we get into all of that, what were you doing before you started VamosVentures?
Yeah. And thanks for having me. What you're doing is awesome on the show. So big fan. Before VamosVentures, I did a few different things. I often like to say, the most interesting people do a lot of zigzags, right? Especially in the startup and venture world. And so before VamosVentures, I was working. So after I went to Brown University for undergrad, did a lot of entrepreneurial venture stuff there. That was sort of my first exposure into this whole entire space. I was part of the Brown Entrepreneurship Program, launched an organization called Lady Launchers while on campus that was focused on getting more women into founding companies in the venture world. But after that, because I was first generation college student, my parents, dropped out at young ages from the school system, said to myself, let me get a baseline understanding, a big brand name of in the finance world. And that was when I went to Morgan Stanley and did capital markets, where I was covering all of these public consumer equities, your companies like Shake Shack, et cetera, and really got to know what, moved the markets, what management teams cared about, a lot of storytelling behind the companies as well. And then after that, after 2 years, I was like, finance is really not my thing. I do really like this startup hustle. And I had been reading about a startup out of YC called Shoptiques.com. At the time, Shoptiques.com was very high flying. It was basically building digital storefronts for mom and pop shops. And so, think of an Amazon meets Farfetch type of business model. And so did everything there from business development to sales. I was on phones trying to sell this product to, these mom and pop boutiques, and very much learned all the in and outs of early stage company building and culture and, how to rally teams. And it was a wonderful experience on all of those things, startup life. And then after that, I went to go back into corporate world to really figure out how these larger companies think about technology, buy or build, where I was at the intersection of the consumer and, some of these technologies, meaning buy online, pick up in store, omni-channel initiatives, virtual beauty at Estee Lauder and Saks Fifth Avenue. Again, really trying to figure out how can we put technology in front of the consumer to then interact with products that they want to buy, which was really, really interesting and in the early days of all that stuff. And then I went to business school, and that's when I started thinking to myself, what's a really great combination of everything that I've done from my finance to operating experience, like more strategy experience. And I said, venture capital with this thematic investigative way of thinking and investing, and you still get the finance stuff, you still get, the people side of things, and you're really working with the best and the brightest, these innovators that are really going to disrupt these different verticals. And that was really, really interesting to me. So I worked for a few different funds, but ended up meeting Marcos Gonzalez, who is the founder of VamosVentures, and, started having an impact orientation and mindset because I started seeing all of these discrepancies and these terrible numbers and the funding that goes to Latinx and diverse founders. And even that there weren't many capital allocators who identified, right? And so I wanted to contribute to bettering those numbers and joined VamosVentures. And you mentioned it, but, we're very much focused on investing in Latinx and diverse founders at the earliest stages in future of work, FinTech, sustainability, and health and wellness. So here I am. I've been at the fund for a little over a year and a half now, and we're in our fund one. We're going to raise our second fund, hopefully doubling, if not tripling, if not quadrupling the impact. And so this is everything that matters to me.
Yeah. There's so many questions that just flood my head. But I guess one thing just right off the bat is what goes into raising a fund? I don't think a lot of us know kind of how venture companies go out and about and raise a fund to then invest in other companies. What is that process like? And what are the measurables to that? Is it a certain amount of investors? Is it a certain dollar amount? And then how do you kind of use that then to start evaluating companies?
Absolutely. It is being on the founder side, I like to say as well. So we have that experience of like, you really got to hustle. You really got to find the early believers and, you're building something very much as you're doing with the startup. And so, for Marcos, who really led that initiative and effort for Fund One, it was him developing a lot of relationships over time with those early believers. And the early believers are folks that do think that there's huge opportunity in us going, focusing on Latinx and diverse founders. The early believers believe that a diverse emerging manager like Marcos can accomplish outsized returns while still having impact, right? And you sort of need a lot of innovation and thought leadership on that side to believe in a fund like VamosVentures. I think more limited partners, right, investors in our fund should be like that because there's just a huge opportunity there. And so that's sort of the process. It's developing those relationships over years and years, getting them to align to the vision. And hopefully they already have that vision of where the world's going and some of these demographic changes that we're seeing in the country, changes in the technological landscape and founder profiles, right?
Mm-hmm.
And that there is, again, a lot of opportunity and outsized returns in investing in diverse founding teams, right? Yeah. And that's what the face of the country is going to look like over the next several years. And so that's number one. Number two is, then going out, let's say you successfully raise a fund, you have a target. We actually oversubscribed with our $50 million. I think the original target was 25 million. And so that just shows how much momentum, right, was in this. And so once we get that capital and we have those partners on our own cap table, if you will, it's then going out and executing on the investment side and finding these amazing founders to then invest in. And so that's thinking about portfolio allocation and strategy. So we're probably going to invest in total in maybe 30 to 32 companies out of this fund. And we, did a lot of exercises in the early days of like, now we have the capital. How are we going to efficiently and effectively allocate it and make impact at the same time? And so that's why we bucketed our investable dollars in 4 different areas. So we mentioned sustainability, future of work, health and wellness, FinTech. And so each of those buckets has a certain allocation. And then within that, we say, okay, well, how much is early stage? How much is later stage? Early stage meaning, pre-seed to Series A, later stage meaning post-Series A. And how many dollars, go to those different buckets. And then, our thesis is investing in these Latinx and diverse founders. And so how do we source and find those types of founders who are building within these respective buckets to then deploy capital to? And that's very relationship driven, right? It's actually going out there and being present and and caring, because this is my background too. And this stuff matters to me. And so being attached to the culture, being attached to the community, talking with other investors all the time, seeing what the pulse is, getting, other great founders from the founders that we've invested in and that we know in our networks. And so it's just this constant hustle. And then finding what's key to VamosVentures when we deploy that capital is finding founders who are a perfect fit from an alignment perspective, meaning like, this is the stuff that we're doing really matters to them. It's strategic for them, and that we could also be helpful on our side with them growing and building and scaling their businesses. So hopefully that's helpful.
Yeah, no, it really kind of systematically orients my mind into how the process works. And I definitely want to talk about, I think the overall, I have my hypothesis about investing in founders and in diverse backgrounds, but just to, kind of, I guess, close the loop on the mechanics of it. Do most funds go through different series of rounds where they collect kind of a group of investors, kind of raise a fund amount and then distribute the revenue? And then or is there a point where the revenue generated from the investments start to go into, say, a pool that then redistributes into newer investments? When did that transition happen for most companies?
Sure. Yeah, there's a long life cycle of funds. So, typically, I think LPs have sort of a long-term time horizon when they invest in venture capital, right? That's the risk reward. That's the profile, right? You're investing in very early stage businesses that, hopefully will exit and exit in a very big way in like, let's call it 7 to 10 years, right? And that's when the returns sort of hit. And so the way the fund works is, of course, we have to return capital to our LPs. And then there's the carry component where, the general partnership gets some of that carry, right? And then, even some of the team. And so we're incentivized by that, right, to find literally the best and brightest and most innovative founders that can then go out and build unicorns or, scale and exit unicorns. And so that sort of how distribution works and the mechanics behind the fund. And the way that that's structured, again, is because it's incentivizing us to then, go and find these best companies that will return capital to LPs. But, very much from an impact perspective, there's two different camps, right? And we're strong believers in that. Again, you can have impact and these outsized returns, but there's another camp that says impact kind of fluffy. Like, what is that? And, does it really matter? And, are you sure that you can get outsized returns focused on, XYZ type things that are more impact oriented? And again, we're very, very keen on that. It's true. Returns and impact.
Yeah. And what is it like? I guess, obviously, I think, access to more funding gives us more diverse amount of products and services and things that are kind of in momentum in the world. But I guess outside of that, what is the benefit of investing in a community that's, say, underinvested in Latinx founders? What will we see, I guess, beneficially as a community of people, professionals, even just like citizens with more investment into these populations or these communities of people who are underrepresented?
Yeah. There's a few different things. And, when we talk about what impact means to us, it's not only diversity, right? Which is, diverse founding teams. And, there's a bunch of stats on how diverse founding teams do perform better. And even from a public company's perspective, right? Diverse management teams tend to outperform non-diverse team, but it's also creating wealth to then distribute back into the community. So, we're firm believers in that wealth, equity, and agency created for founders and teams and communities, then, yield, right, social mobility and job creation and funding into, vehicles like VamosVentures, into other companies, right, founded by diverse founding teams. It's that there's a cultural competency component too from a product and consumer perspective, and that, Latinx and diverse founders, right, maybe some of our experiences as consumers, it is unique. And so how can we inform better product builds? How can we inform some of these companies, to build better solutions that are more culturally competent? I mean, an example is in the health and wellness space, right, that I cover, in that for a lot of Black and brown families, it isn't just one person going through a health issue. It's the whole entire family, right? Even aging and stuff like that. And so just having that cultural, knowledge and awareness. And so, that's why we have such a big bet here. It's that diverse teams outperform. It's that, by funding these winners, right, that it could then capital can then go into and create wealth for individuals to then funnel back into these communities. It's building community, it's building better and more culturally aware products and solutions. And so it's really, it's a big task, but it's necessary. And that's why I think, not only VamosVentures, by the way, is doing this type of stuff. There's a bunch of wonderful funds that have popped up in the last several years that are contributing to this. And it's much needed because there was such white space for so long and no focus on this.
Yeah. How can a diverse founder coming from a diverse background utilize not only their experience but also communicate it in a way that really is attractive to like companies like VamosVentures, funds like VamosVentures, better than I guess maybe they were previously? Now that we have access to all these funds, I'm sure that there are ways that you can think of they can self-promote and also improve themselves. Is that accelerated groups and then going to funds? Is that sharpening stories? Where can they go and what can they do as founders to better get the access that they're looking for into funds and resources?
Yeah, there's a few different things. And, I think especially with X and diverse founders, what I find, and this is probably within myself too, being in the venture capital space, there's such this imposter syndrome of like, am I good enough? I got here. Like, where do I go from here? Can I build a unicorn? And the answer is absolutely freaking yes. You can. And it's in a lot of our bloods to, surviving, right? And hustling and building big things and being creative and being passionate. And so, I think that goes well into storytelling, which is own your story and where you come from and everything that makes you unique in your background to what you're building. I think the most powerful pitches that we see are from folks that have intimate, personal and work experience that they then say, okay, wait, there's something wrong here that I need to build upon. And then they go out to build a company, right? And, it's just because of that experience that makes their approach so unique. The other thing is really painting a big picture on the market, right? VCs are, notorious for going really deep on market sizing. And how big is this market? And can this, again, get to a unicorn type level company? How many people would want this? And so you really need to paint a really big picture there. And that, that's also on vision. Like this will become a multi-billion-dollar business, right? And believing it. And then, the other few things are competition and landscape and, the uniqueness and value props. On the competition and landscape, it's very much, this is where the white space is. This is how we're tackling it uniquely, right? That's the value prop. And finally, I will say team, right? Painting a great picture on the team of why there's relevant experiences, how you're building, a really great, passionate group around you that is really keen on the product and or solution that you're building, that you do have diversity and that you're mindful of it. And so I think those are like the different components. I think within all of that, though, you can see a theme of like really great storytelling and pitching that larger vision.
Yeah. What would you say is one of the most compelling, I guess, pieces of evidence that a company could come with to promote themselves or to kind of go into a negotiation with a venture company? Is it the amount of users? Is the projected profit and revenue targets? Is it how they're tackling their total addressable market? What in particular is probably the most compelling you see from the venture side that you would love for a company to come with to kind of strengthen their, not their argument, but their, I guess, help them advocate for themselves?
No, it's a great question, and it's also a difficult question because at the earliest stages, how much traction do you actually have? We see some companies with maybe a pipeline, right, of users, and that shows that there's momentum building, to your point. There's other companies that are pretty early on that have, 100K in revenues, right, a month.
Yeah.
And so I think, when we think about pre-seed and to series, especially for the pre-seed and seed companies, that product market fit, anything directionally that shows that and that there's stickiness with the solution, I think that's good enough, right? And that could mean a pipeline of customers or a wait list. That could mean an LOI, right, from a business partner. That could mean that you've built and iterated on product, right? And you finally got it to a point where you're about to launch, but at least there's some sort of product build there, right? And then when you get to later stage companies, let's say Series A and beyond, although, Series A is still pretty early, then you start getting more deep into the numbers and the revenue and the customer acquisition and the LTV and, all the metrics, the margins that come along, right, with building these types of companies or certain types of companies. And that's where investors are like, well, how much in revenues are you doing? Or like, how much is it costing you to acquire customers? How long are they staying on your platform, right?
Yeah.
That's when those questions start coming up. But I think this question's and answer is very important for the earliest stage founders because I often get it of like, Ashley, what are you looking for at the earliest stages? Because we really don't have much to show for things, right? And I often say, listen, as long as you can directionally show that there's product market fit and or that there's momentum building in what you're doing, that's good enough.
Yeah. And what would you say are some of the, in your experience in particular, are some of the biggest reasons that you won't work with a company? Is it that they don't align in terms of the mission? Is it they haven't kind of said what, or I guess accomplished what you said previously, which is a directional kind of move toward a product market fit? What are some of the most reasons that you don't accept companies or work with companies? And then I guess globally, why are some companies not being, worked with other firms?
It's a few different things. I think from a VamosVentures lens, it's, usually timed like the market. Is this market big enough? Again, is there sort of a stickiness? Does it relate to the mission that we have? I think to your point, alignment's also probably the other big thing. Like, do these founders see a world that we see? Are they aligned from a mission perspective? Like, does things like board diversity matter to them, right? Do they have a pure and genuine interest in connecting to the Latino and diverse communities, right? Again, just going back to the healthcare example, because that's what I cover. If there's a healthcare company that's focused on better care delivery, right?
Yeah.
Are they intentional about how they market to Black and brown communities? Like, do they want to go to those types of communities? Do they want to engage with those types of patients, right?
Yeah.
And build around their experiences and get more informed about them. And then that's why they're engaging with the strategic like VamosVentures to better understand how to, right? So it's a bunch of those different things. So market size, and landscape, alignment. And then, generally, we're very mindful of our different thesis areas. So in FinTech, we're very keen on empowering small and medium-sized businesses to scale and operate efficiently, right?
Yeah.
If there's a company that maybe doesn't touch that, like let's say, I don't know, crypto, Web3, that's just outside the box for VamosVentures, we're unfortunately not going to invest in it because it's not aligned to sort of our thesis. In health and wellness, we're very much focused on affordability and access, right? In future of work, it's about empowering the gig worker and upskilling and reskilling. And then finally on sustainability, it's very much, clean and and mindful supply chain and clean technology. And so,
Yeah.
if things don't fit in those scopes, I think it's a little harder to make the case at VamosVentures. Now, generally why companies are, I think, being passed on is, I think just that which is founder VC fit, so to speak. And I often tell founders, I do help a lot of founders outside of VamosVentures, it's just because I want to see them succeed. I often say, choose your cap table wisely. And fundraising is a long game and it's a full-time job. And so you want to go into fundraising with the mindset of, let me make a CRM of investors that I know, one, care about what I'm building, have a thesis around it, have invested in not like competitive companies, but similar companies, right? With similar missions, so that I don't waste my time. And I'm a healthcare founder, going to a generalist fund that, is like, oh, maybe I have 2% allocation to healthcare, right? So being mindful of who you're having conversations with.
Yeah. I have two questions here and I'm debating on which one to start with, but I guess I'll go with the easier question, kind of in line with what you're talking about. You mentioned that certain areas in particular for VamosVentures you're focusing on with small to medium businesses, at least in the FinTech space. What within the spaces, the four spaces that you're working within, do you feel like, just for fun, has the most potential kind of addressable market and has the most need in terms of innovation and or influx of technology or interjection of technology? Which one of the core areas, in your opinion, are you like, I think this has the most area for opportunity?
In my humble opinion, and I hopefully no one at VamosVentures hates me for saying this because I cover healthcare and FinTech, it's in the healthcare space largely. There's so much innovation needed, and in particular, the aging space. I mean, I can tell you, I just went through a bunch of stuff with my grandmother in trying to get better care for her. I mean, unfortunately, she, broke her wrists and she has very bad bones, and it was hard to navigate, right? An accident. And so I'm like, holy, blank. This experience is very, very fragmented. It's full of friction. We had to talk to a multitude of people to get care for her and to figure out what's next after this terrible fall and what the rest of her life is going to look like, right? With care, with food delivery, with, everything else that comes with that. And so I think the aging space, not only from an experiences and like care context, but even as we go deeper into like, what does death care look like, right? What does engaging with the family through all of these stages of life look like, right? Again, extremely fragmented experience, a lot of different technologies not speaking to each other. I think that area is, and then, we have a big and growing elder care demographic in the United States. And, frankly, we're not caring for them in the right ways, right? Not only from a health and wellness perspective, even from a financial wellness perspective. And so I just think that whole entire area is ripe for disruption. And that's something that we're very keen on looking at VamosVentures, particularly with aging, is how to better care for our elder ones and how to also like personalize medicine and even care for them in the home. Things like that we find extremely interesting that, we're trying to go out there and talk to founders and figure out what types of business models, right, make most sense. But I think that general landscape, again, is ripe for disruption and something that we're probably going to do a next investment in.
Yeah. I mean, I there was a few founders that have been on the podcast who are working within that space, and not even just the elderly care, but just within health and wellness in particular. And it's crazy to kind of discuss how much disruption is needed, how much technology can really improve processes, how much it can improve costs and the overall experience. So yeah, I'm in a similar boat. I think, that industry as well, it needs, huge boost in terms of technology and innovation. I guess from a founder's perspective, working with a principal, there's not really a lot discussed about kind of that whole relationship. Not that I've seen a lot or I've heard only anecdotally, but how is the process of working with the founder for you? Do you obviously start a conversation? How engaged and intimate is the relationship, and also how much should a founder be aware of the day-to-day functions of a principal's responsibility to best kind of manage their expectations from their end?
Yeah. And, maybe some investors are going to disagree with me here, but I'm an advocate for the founder. So I will take the founder hat here and say, founders, please choose your investors wisely and make sure that, of course, you're not going to know everything, right? And so that's why strategic capital and venture capital and, hopefully getting that capital to scale fast makes sense. But you don't want someone to just try to control your company and, give you direction when maybe it's not so welcomed and the industry and the problem the best, right? And so that brings me to my point of what we try to do at VamosVentures is be there when needed and be, a listener and support where we can. And, with all my companies, I try to meet with them, if not 2 times a month, at least once a month, just checking in. How are you personally? Founder well-being is big, right? How are you mentally? How are you personally? 2, what are the big major updates? Although, we get investor updates all the time. And so we anticipate some of these questions and comments and what, right? How's the company doing? What do you need help with? Is it connections to other investors? Is it, a potential partnership opportunity introduction, business development opportunity, some research on a consumer profile? Is it connecting with other founders to see how they went about doing these things, right? Is it, being connected to thought leadership within the Latinx and diverse communities on healthcare and how they think about healthcare and policy and all that fun stuff, right? And so, and then, also is operationally, like, can we help, like how to set up admin and all those other things, right? Yeah. And so those are how we structure the conversations. And then, of course, we add perspective and, maybe you should do things this way, or like, I have a thought here, and that's helpful to founders, right? But I think where we draw the line is like, we're not trying to control the business or, push it in one direction. I do see that happen with founders from time to time. And I'm not of that camp and of that belief. I do think that a lot of times, right? Most of the times founders, they know their business is the best. That's their baby, right? And so that's how we work with founders and check in with them. And then, outside of that, we're building something at VamosVentures, which is a true platform. And that is everything from, right now, a Notion, massive Notion page with multiple subpages that focus on things like how to build a CRM of investors when you fundraise, how to go to market. Yeah. Here are some partners that we have discounts with, right, on the tech stack that you can build and scale your companies with. Yeah. So it's very much a lot of that stuff too behind the scenes.
Yeah, this is a selfish question, but for the companies that are being built now, are you seeing them built in a new style of technology? And let me take a step back here. I've seen a huge influx in, say, no-code platforms being increasingly more used. Things like Bubble.io is now pretty much bringing everything no-code of the back end in terms of plugging APIs, bringing things up to kind of a really modern but quick and efficient speed. Sure. Are you seeing a kind of trend in movement towards no-code technologies or anything else in particular that people are working with to start kind of, whether it's decreasing costs or increased speed, start to be more effective when building their company or building their product or technology?
Absolutely. Exactly what you just said. And, that's the larger point of building these technologies more efficiently and really doubling down on that end consumer and understanding and moving quickly, right, with that iteration. And so that, you make a wonderful point, and I'm extremely aligned there. That's exactly what I've been seeing. And then, just putting sort of my health and wellness hat back on, it is leveraging those types of platforms. So, again, at the baseline, give the consumer what they want, get informed on that build and what their feedback is, and then, funnel it back into that consumer experience. And then maybe eventually go out and build their own things, right? Their own technology stack. But I do think that that's the way the world's working and how a lot of founders approach building these types of tech stacks and these companies. So, and that's great on the cost point too, because in this market, right, what we want to see is, can you build in scrappy ways? Can you use technology in efficient ways to, cost cut, right? How are you conserving cash just generally, right, outside of the tech stack? How are you being more mindful of these ebbs and flows of the market, right? It's a very rocky time, right? And how are you thinking about staff and, headcount and all that fun stuff? Mm-hmm. So that's all within that question.
Yeah. I'm curious, and it's kind of like a long-term question, but it's a long-term reflection, I would say. We went through the pandemic and we're kind of out of it now. When we're in the midst, arguably, some argue, in a recession now. And a lot of the commentary coming out is like, venture capital has less money or is funding less money or taking more of a loss. From the other side of the aisle, I disagree. I feel that companies are just being more strategic and smart about where they're allocating their resources and are looking for different characteristics within companies now versus, hyper growth. How many users do you have and how can you turn that into revenue versus companies who actually have active revenue? But what have you seen? What is the change pre-pandemic and then kind of during this recession time? Are venture capital losing money? Are they reallocating them? What's the strategy difference from prior to now?
Yeah, I think I'm aligned with your point of there's a lot of doom and gloom out there, right? That's just the
Sure.
general commentary. But I think what we need to refocus on is the digital economy has grown at twice the rate of the overall US economy since
Yeah.
2000, right? And technology is embedded in everything we do, right? I think venture capital too has grown and there's a lot of dry powder out there waiting to be
Yeah.
deployed. Are we going to be more careful with that deployment? Absolutely, right? Just given the general market dynamic. But there's dry powder and dollars out there to fund these rounds, right? I do think, to your other point, that there has been a reset and there has been, maybe 18 months ago, a pre-product, pre-revenue company could raise at $100 million post-money valuation, right? But we're not in La La Land anymore. Right now, we want to see real business fundamentals. And that, although I think and feel very strongly that storytelling is really important from a founder perspective, it's not just the storytelling, that you have to back that up with real, again, engagement, real KPIs, real products. And so that's where I think the reset has been. But generally, I'm really optimistic on the market. I still think, again, there's a lot of dry powder out there. I think that technology is getting bigger and better. And again, it's embedded in everything we do, and it's not going away anytime soon. There's a lot of momentum and tailwinds.
Yeah. What's particularly hard about your job?
What's particularly hard about my job? That's a wonderful question. What's hard about my job, especially given the type of fund that I'm at, is saying no.
Yeah.
And I wish we could, at VamosVentures, say yes to most of the companies that we see. But unfortunately, that's not the case. We have a limited amount of dollars to deploy, and we want to make big bets in those different companies. And so, for the struggling Latina founder building a wonderful FinTech that maybe is a little too early for where VamosVentures, would like to be, that's such a hard conversation and no to make, right? Because I believe in this person and I think that they could do it. But it's just that we, again, from a strategic standpoint, we can't get there at that point in time. How I tried to sort of soften that and that feeling is, let me still be helpful because this still matters to me, right? Although VamosVentures can't invest at this stage, let me go out of my way and introduce this founder to maybe more pre-seed or angel or strategic types of investors at this point in time where they could get the dollars, or maybe I introduce them to an accelerator, right? Or for some sort of, maybe non-dilutive funding and grants that they could leverage, right? And maybe I could help them with more of their fundraising and their storytelling and their pitch building, right?
Yeah.
And then keep that door open so that come seed Series A, right? We could re-engage and hopefully they're really successful and, I could be helpful until then. So that's the hardest part of my job. And, I often have to do that in the seat. And, I can only imagine being on the other side and getting so many no's. Like, this game is just resistance and, and climbing up that mountain. If the stonecutter's credo, it's like knocking at the stone until it, until it breaks. Right. And that's what this is all about. And I could only imagine being on the other side and getting 100 no's before that one yes. But, that it happens, right? It does happen. And so, so hopefully that answers the question.
Yeah, it definitely does. I would like to ask this as a light curveball, but if you weren't working on VamosVentures, what would you be working on?
I would probably be working on an aging platform, talking about personalized medicine and the aging experience and aging in place and making those folks comfortable, something building in that vertical. I'm seeing so many different business models and I'm developing perspective as to where there's white space, and I won't share any secret sauce. You can contact me separately if you do want to talk about it. But I think that's what I would be doing. I do love building. And the beauty about being at VamosVentures is I get both the building side and the venture side. The building side in that we're early, we're in our fund one, we're going out to fundraise for our fund two. And, I've helped in building the processes, building a lot of the back end, building a lot of what does platform and value added mean at VamosVentures. At the same time, investing in awesome companies, right? And so I'm getting best of both worlds right now. And I'm really happy about that. But I would probably be on the founder side if I wasn't doing this.
Yeah, that's awesome to hear. I would like to ask this next question for my audience, but also for selfish research, whether it's early in your career or now, what books or people have influenced you the most?
Well, my parents, because I just saw them like hustle and, my dad was very influential. I think, as a woman in this space, you should take on the mindset that like, I can do anything, and having a support system behind you is really important. And my parents were always that. And in particular, my dad was like, yeah, you could be the CEO on TV one day. So
Yeah.
kudos to him for just giving me that mindset from an early age. I think
Yeah.
from an entrepreneurial lens, I always talk about Sarah Blakely at Spanx. I think she's a wonderful entrepreneur in not only the billion-dollar business that she created, but she's very humble, and she still is in the weeds of the company asking customers, how can I improve this product, right? And you
Yeah.
sometimes don't see that from founders who have, built and have become really successful. And then in terms of a book, Alpha Girls is a really wonderful book. It's about the earliest women venture capitalists and what they had to go through, and
Yeah.
the successes and trials and tribulations that they had early on in their careers. And I read that book and I was like, wow, there's been a lot of change since they were venture capitalists, or since, they started out their careers. But there still needs to be a lot of change in this landscape. So yeah, those are the three things.
I love that. And I'm so excited to share kind of I love sharing and asking that question because it's such a diverse group of knowledge. And it really, I think, speak to the mindset of how to not only develop it, but also to foster it with the different pieces of information. So Ashley, I know we're at time here, and I think we could talk, time and time again in hours on what the future of investment looks like and what diversity is really going to do in terms of its impact. But fortunately, we're at the close here, but we'll have to do a round two. And I always like to give my guests a chance to give us your plugs. So where can we, be a fan of the companies you're investing in, a fan of VamosVentures? What's your LinkedIn's, your Twitters, your Discord, whatever you have, let the audience know where we can find you.
Yeah, absolutely. So anything VamosVentures, VamosVentures.com. Please follow us on LinkedIn, on Instagram. We also have Twitter. And then me personally, listen, I'm always willing to talk to folks. So you can directly email me at ashley@VamosVentures.com. Also find me on LinkedIn. I check LinkedIn often and really post, a lot of relevant content for founders and resources and opportunities. So catch me on any of those.
Amazing. Ashley, I really hope you enjoyed your time, and thank you so much for joining the podcast today.
Thank you for having me.
Of course.